Coming up on the SBS On The Money podcast, does Australia have a cultural diversity problem in its boardrooms? Real wages are rising and the Australian share market continuing to underperform the US. We'll have all the details next. Hi everyone, it is Wednesday, the 14th of May 2025. The Australian share market rising today, but only just up by 0.1%. We'll have the details with Niv Dagan from Peak Asset Management in a few moments. It follows some positive wages data. But first, does Australia have a cultural diversity problem at the boardroom level? Research from Watermark Search International found Anglo-Celtic directors now make up 91.9% of ASX 300 board members. That's up from 91.2% last year. So to find out more, Rhayna Bosch spoke with David Evans, managing partner at Watermark Search International.
We have seen some significant progress on gender diversity. We've been doing this research for 11 years, and over the course of that 11 years, we've nearly seen gender double. In 2016, it was 20% of women were on boards. As of 2025, where 37% of women are on board. So we've seen some really good progress on that front. To your point that we are really struggling on cultural diversity and the other forms of diversity. The report that we produce looks at 5 different types of diversity, and we really view diversity in all its forms. It's not only about gender. And so what we're looking at the other parts, they really haven't moved significantly. In fact, some of them are actually moving in the wrong direction.
Yeah, so looking at some of those, I mean, First Nations representation remains low, LGBT plus the same, disability or people living with disability on ASX 300 boards appear to be absent completely. And then we've got this cultural diversity aspect, which has decreased. Can you talk us through why this is happening?
Look, it's a complex problem and there's no silver bullet. But we do need to be doing more than what we're currently doing. You know, we've been tracking this for some time, and effectively over the 11 years, cultural diversity has not moved. We are still appointing 91% of directors from an Anglo-Celtic background. And we don't feel that's the best way to solve or look at problems in today's, fast-moving global economy. So there are other things that we can do to improve this stat. Some of the things that we're doing at Watermark Search is we're looking at other boards. So we're looking at government boards, we're looking at for-purpose boards, we're looking at other talent pools in which there are more diverse directors that the ASX companies should really be looking at to broaden their talent pools and how they're looking to solve this challenge.
Yeah, you mentioned some of the complexities associated with this. What are the main challenges for businesses who are looking to increase diversification on their board, and what are the advantages to actually getting there?
So the challenges are, or the perceived challenges are, a limited talent pool, right? And we just don't necessarily believe that's the case. What we were looking to do is really empower boards and chairs to look at these other talent pools where there are diverse lived experiences where we can bring them onto boards. Maybe they don't have 10 years ASX listed experience, but our position is maybe that's not the only requirement you should be looking at. There are lots of other diverse viewpoints that could be welcomed onto boards. There are advisory boards, there's committees, there's way to get these people have their views heard at the table, when at the moment we worry that they're not being learned or listened to. So I think there's avenues in which to do it, but what we're seeing the challenges is boards being somewhat really risk adverse and mandating they must have X number of years on ASX listing experience. And we don't really feel that's going to be the best way to progress this or get these diverse viewpoints at the table.
What does this mean for those boards who do manage to achieve it, though? I mean, if you do have a more diverse board for your company, what is good about this? What does this help to push ahead? What are the advantages?
Having diverse lived experience on your board is hugely beneficial for looking at challenges. We're in a fast evolving global economy. And looking at things through one lens is really limiting. We're seeing limited innovation in Australia. We've got this huge productivity challenge and slump that we're in. And part of that is a reason we're looking at problems in the same way we've always done it. Shouldn't we be looking at different experiences or how other lived experience, cultures, lenses at looking at things are doing this, or keeping an eye on other opportunities for innovation and productivity? We are seeing the companies that embrace diversity are looking at these challenges more fully, and they're able to identify opportunities and move faster when there is an opportunity. And so we feel that diversity is not about box ticking. It is around adding value and creating better business outcomes, creating more diverse viewpoints at the board, and having a really high-performing board can hopefully create a more productive economy for us all.
Looking from a global perspective, though, diversity, equity, and inclusion practices appear to be fading somewhat, particularly in the US following some executive orders from Donald Trump. Can you talk us through how you kind of see this?
Yes, look, we've seen that evolve. We've seen organizations that have a US head office or have entities in the States particularly have to evolve some of their language. And look, the legislation is changing over there. And if you want to work with the federal government, you need to evolve on that. What we're seeing here in Australia, though, is slightly different. We're seeing some organizations amend their language around how they approach this issue. But the AICD really recently did a survey, and we include the results in our report, around the changing sentiment of DEI globally. And they found that 67% of the people that they surveyed had no change on their view on DEI, and 24% indicating a stronger commitment. So we have 81% of people having the same or stronger commitment as a result of the change in tone from the US. So we're not really seeing a huge significant change here in Australia. What we are seeing is organizations evolve the way they look at this and maybe involving some of the language. But the vast majority of organizations here are still really seeing the benefits of diversity, and they still hold it true to their values around what their investors, their customers, their employees, and their stakeholders want. So we don't feel we're going to see this watered down or evaporating anytime soon. In fact, some organizations are using this as an opportunity to embrace diversity at another level.
That's Rhayna Bosch there speaking with David Evans, the managing partner at Watermark Search International. Let's get some economic news now, where real wages are rising but cost of living pressures remain. The Bureau of Statistics says the wage price index rose 3.4% over the year to March, and that's above the rate of inflation, the headline rate at 2.4%. So where are all the pressures coming from, and what does it really say about real wages? I spoke with Devika Shivadekar, an economist at RSM Australia. Devika, first of all, how would you describe the pace of wages growth in Australia, especially after such a long period of negative real wages, which happened for about 3 years?
I think it's a welcome development when it comes to real wages growth, Ricardo. Naturally, with a positive real wage, it means that there's more purchasing power. So it's likely to help boost consumption, which is by extension going to support the economy, particularly in a situation where we are aware that globally things are quite uncertain. So it'll be good to be supported domestically by some robust consumption metrics. So real wages is a definite plus, and inflation has been consistently on a downward trend. So I would say net, it's a positive outcome for us after a very long period of negative real wages.
I guess at the same time, though, there's a lot of catch up to be made, right? Which is why a lot of people would still be feeling cost of living pressures. What's driving these wages higher right now?
This quarter particularly, Ricardo, I think we've had a couple of seasonal factors as well as some one-off factors. Now, in the private sector, for example, if you were to consider that, in the seasonal factors, we had the annual wage reviews that usually happen in the month of March. And among the one-off factors, we had the childhood education retention payment adjustments, as well as the stage 3 workers case that went through was successful. And then naturally wages had to be amended. And in the public sector, this time for the first time since 2020, if I'm not wrong, third quarter 2020, the public enterprise agreements have contributed to more than half of the quarterly wage growth in the first quarter of 2025. And it was all based off of the new state-based enterprise agreements. So we've had a couple of very big upticks seen in both public and private, so broad-based wages growth. Yeah, that's it. That's all. Yeah.
Now, What do you think the RBA will think about this, and what will it mean for interest rates? Because here's what I find interesting. If you've got wages rising, there's the potential for inflationary pressures, right? But at the same time, the Reserve Bank says, hey, we don't mind if wages rise as long as we see a lift in productivity. Isn't that the key issue here?
Yes, absolutely. Absolutely, Ricardo. So look, from a monetary policy perspective, I would say the current pace of wage growth remains, yes, it does remain above the long run average of whatever it's been, around 2.4 to 3%, but it has clearly moderated from last year's peaks. Now, if we look at the statement on monetary policy published in February, 3.4% of wage growth is something that's already baked into the RBA's forecast. So it's not a materially surprising number for them. They had already expected wages to increase in line with the number that we've got. So yes, while the RBA may view the renewed pickup in wage growth with some caution, particularly given the ongoing concerns around productivity, I still maintain that they are going to go ahead with a 25 basis point rate cut at the 19th and 20th May meeting, simply because the board would consider the full spectrum of economic data leading up to the meeting. So it's not just wages that they are going to look at. They're going to look at inflation. They're going to look at labor market, which is going to come out tomorrow. They're also going to look at growth data. So broadly, I think it's essentially just a drop in the ocean, I would say, for the RBA. But yes, they will be looking at the uptick with a little bit of caution now. Perhaps to touch upon the angle of rising inflation and the risk of rising inflation, I think I'd like to touch upon the business angle a bit. For businesses, this broad-based wage growth presents kind of a mixed picture, I would say. So it's a fine line, particularly for SMEs, because now they are going to face some challenges, particularly in the area of labor input costs, even if broader inflation is coming back towards the target range. So on one hand, we've got rising wages, which can support consumer spending and boost demand. But on the other hand, higher labor costs means profit margins get squeezed. And most often than not, the first line of defense for businesses is to pass on those costs to consumers. So yes, what he said about there being a potential risk, inflationary risk with rise in wages, it's a legit concern. But like I said, in a broader scheme of things, I think the RBA should be cautiously optimistic, if I may use that word.
Devika Shivadekar, sorry, there from RSM Australia.
Now, Market Day on the SBS On The Money podcast.
The Australian share market was in negative territory for much of the session, but rose at the very end. The S&P ASX 200 up 0.1% to 8,279. It did, however, underperform the US, which has really been powering ahead over the past couple of days. In fact, the S&P 500 on Wall Street recovered all of its losses made so far this year overnight. So to tell us more, I spoke with Niv Dagan, the Executive Director at Peak Asset Management. So, Niv, there seems to be quite a deal of optimism following that temporary trade deal between the US and China. The S&P 500 overnight in the US now reclaiming all the losses it made so far this year. But the market here underperformed the US yesterday and hasn't really moved much today. To what extent, though, is there still uncertainty out there?
Yeah, it's a good question. I mean, we've seen obviously the volatility index hit the lowest levels since the whole geopolitical issues with the tariffs. So, Ricardo, it's really buy the rumor, sell the fact at the moment. And as you mentioned, the US equities are outperforming and Australian equities are underperforming, predominantly with uncertainty with consumer spending, inflation, and some of the earnings reports that we've already seen just a few months ago as well.
More on the US inflation overnight reaching 2.3%. That's the lowest annually since February 2021. But surely this is old news because of Donald Trump's tariff policy. Are there real concerns then of the implication those tariffs will have on inflation in the US and the likelihood then of higher interest rates in the US for longer?
Yeah, look, I mean, we've obviously just surpassed an election, and there was some investors are worried about what was going on globally as well. So, look, with interest rates, we believe there's still going to be 2 to 3 cuts this calendar year. So investors are seeing a little bit more outflow away from those defensive stocks into something that's a bit more in the small cap space. So, look, we are expecting to see some further inflows into Australian equities. as some of that certainty comes to light.
All right, so tell us how investors are dealing with all of this uncertainty, particularly in the US, and what's the relationship with gold and the US dollar, because they've been bouncing about?
Look, I mean, commodities are denominated in US dollar, so we have seen US dollar weakness over the last month or so. And that's really interesting to see the crypto market have a bounce, because crypto is essentially a really strong barometer for risk. So Bitcoin, we've seen 104, 105,000, which is a level we haven't seen since tariffs began. So we are seeing, Ricardo, more money coming into the small cap and equities, but it is all about that risk trade right now. That's the key.
I guess one of the big corporate news stories of the day is the market's biggest company, the Commonwealth Bank, posting a flat third quarter earnings report of $2.6 billion, but that was a bit ahead of expectations from my understanding. What's your take on the bank and the sector as a whole?
Look, it comes down to net interest margins and also inflation and interest rates. I mean, lending is a big issue. The CEO did come out saying that there are negative tailwinds and headwinds in the Australian economy. So that's something to keep an eye on. They also had a $230 million impairment charge. The $2.6 billion net profit was sensational, but investors are going to be buying the outlook statements, and that's very, very cautious right now leading into that third quarter.
And finally, what are you telling your clients right now, and where do you see the opportunities for investors?
Look, we've seen obviously gold's been the shining light. Keeping an eye on the crypto market, it is signing that, and the NASDAQ, the technology space as a whole, has traditionally underperformed in the last month. So we are seeing a bit of a rotation away from commodities like gold and silver and copper into technology stocks, AI, artificial intelligence, robotics. So look, we are going to see some alpha, and we believe that the market is going to set all-time highs over the next few months.
It's Niv Dagan there from Peak Asset Management. Don't forget, if you enjoy the podcast, give it a review and a like on Apple Podcasts and Spotify, and to click that subscribe button.
This SBS On The Money stream is provided for informational purposes only. The content in this stream should not be understood as constituting advice or a recommendation. It is not personal advice, and it does not consider your personal circumstances or objectives. You should contact a licensed professional before making any financial decision.